Follow the money. If you want to understand where crypto policy is headed, start with who's writing the biggest checks. Over the last few years, crypto went from Reddit threads to real corridors of power. We're talking dedicated war chests, super PACs, and full-time DC teams spending tens of millions to influence what lawmakers actually write into law. Here's the play: access, narrative, timing, access first. Big exchanges and venture funds now have offices a few blocks from Capitol Hill. They hire former regulators, former chiefs of staff, and policy pros who know which doors to knock on and when. That gets meetings on calendars the average startup could never touch. Narrative next. Consumer protection, American competitiveness, keeping innovation onshore. The message is simple: set clear rules so legit companies can build here, not offshore. And yes, that framing tests well with both parties. Timing is everything. A hack, a bankruptcy, or a stable coin, breaking the buck. Suddenly everyone's a payments expert. That's when draft text gets markup dates, and lobbyists sprint. So what's actually on the table? Stablecoins, expect reserves, audits, state versus federal charters to get ironed out, translation on-ramps for mainstream payments, market structure, who oversees what, securities, commodities. Clarity here unlocks real listings and actual investor protections. DeFi, self-custody, the tension point. Regulators want AML, KYC, builders want permissionless rails. The compromise may look like obligations on gateways, wallets, interfaces, fiat bridges, tax reporting, cleaner 1099 rules so regular people aren't doing forensics at tax time. Globally, the EU already shipped MiCA, one rulebook across member states. That's pressure on the US to stop regulating by press release and start legislating by statute. Who's winning? Short term. The best funded players. They get a seat at the table, shape definitions, and, frankly, draw moats around their business models. Long term, clarity helps everyone. Developers, banks, and yes, users. Because rules reduce the roulette. But there's risk. If policy gets written by only the biggest checkbooks, you'll see compliance that a startup can't afford, plus gray zones that push open source devs into the shadows. The smart move for the ecosystem now? Show receipts. Real consumer benefits, cleaner UX, fewer blowups, and transparent reserves. Every scandal burns political capital. Every legit use case earns it back. Follow the money, and you can basically predict the calendar committee hearings, draft amendments, election year talking points, then rules that decide which rails scale. Crypto's next power evolution isn't just code, it's coalitions. And the future of policy goes to whoever shows up with data. Voters, and yes, dollars. If you care about where this lands, pay attention to the line items, who funds what, who testifies, and who gets invited back. That's the difference between experiments on the fringe and infrastructure in your wallet. I'm watching the hearing so you don't have to. Stay tuned.